Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Happy Tuesday. All right, so let's take a look at what we've got coming up this week. Or actually, forget this week. What about today? What do we have coming up on Tuesday, July 25? And you'll take a look at the economic calendar for the US. And except for that 10 a.m. Eastern consumer confidence number, not a whole heck of a lot on the calendar, although as we get to the end of the clearing range, that opening range between 9:30 and 10 a.m. Eastern, at the very end of that, we get this data dump. And while it's definitely not near the top of the hot zones this week, it will be certainly one of the more important ones. Now, when we talk about other hot zones, we're in earnings season, right? Now, I actually cannot stand earnings season. I'll be straight up. If you've been a trader for any length of time, 20, 25 years, you know that this extravaganza, this spectacle of earnings is a relatively new thing. Once upon a time, we get an envelope in the mail, and that was the earnings release, not the nonstop media coverage and all the binary bets on, whether within a small 1 to 2 day window we can be right on those exaggerated moves. So it's really interesting that modern day markets, in terms of volatility, one of the main culprits of the volatility that I think hurts investors a lot is earnings. So yeah, I'm not a fan. However, we can use it. So we adapt, right? Can't be a salty dog trader. I'm going to adapt and say, what can I do with this event? And so what I want to remember is the window that's anywhere from 2 to 6 weeks in front of earnings and about 1 to 2 days after is really great for those mean reversions or the volatility moves that will land us in the zones that we are looking to enter. So we use the movement. We don't trade the movement. Very different philosophy. By the way, if you haven't checked it out already, I've got an update exclusively on this and the process that I've used for many, many, many years over at Countdown Trader, the 642 earnings window. If you Google Countdown Trader 642, boom, you will get the very first hit will be this earnings window approach that I've used for decades at this point. So check it out and think about whether or not you're putting yourself in kind of harm's way with the higher implied volatility, especially if you're like myself and you like to be long calls, long puts, because at that point, within 14 days, the advantage goes to premium writers. But remember, this is a very risky time. The window just before and the window after is ideal. So check that out. All right, so that's kind of where we are. And if you take a look at what we have Danaher. Look at these names, and this is a curated list here. This is not a random list. I'm not a big fan of some graphic that has all the logos. No offense to the earnings whisper folks, but I don't need to know what's coming up this week, right? Any of us who are preparing for earnings, we know what's been coming up for the last month, right? When I'm thinking about 3M, for example, today, I was thinking about this June 25, not July 25, not July 24, right? So change the way you're looking at that window and you will find a lot more, I believe, less expensive, more reasonable trend following entries when you look at the window of earnings to be maybe a month before, not 24 or 48 hours. So this is what we've got. This is the calendar right now that's going to be a big part of this week. And you might say, but Rog, what about FOMC, right? What about the FOMC? The quarter point cut is, or sorry, cut. The quarter point hike increase in rates is priced in. At last time I checked, it was somewhere in the vicinity of 99% expectation for the hike. And there it is, right? We're right now at 5 to 5.25%. We expect at 2:01 p.m. on July 26th, Wednesday, will be at 5.25 to 5.5%. And then the real speculation begins. It's not about July, gang, not at all. What we want to, oh, hang on one sec. I did not want to open that. There we go. What we want to remember is September, November, December then becomes the question about, do we pause or do we hike again? The hike is not out of the question, but we have to think about possibility versus probability. Now, remember, when you watch the television, which if you can turn it off, turn it off. But when you listen to everyone on TV, they're going to talk about possibilities in a very dramatic way, right? So please remember, the probability is that we hold. There's a possibility that we hike. So if anyone says, oh, we could see 5.5 to 5.75 in September, and doesn't mention that it's basically 1/4 the probability of the hold, right? They're just trying to stir people up. And that's what television does, right? It's really, those segments are sound bites, too short to be helpful, but short enough to get people worried or riled up. Avoid the TV and follow the data. And this, my friends, is the data. Okay, so let's get to it. Let's get to the questions. That's what we've got coming up this week. FOMC, earnings. I'd say the third most important window for this week is the PCE on Friday. All right, the PCE on Friday. So keep an eye on that one, because what's interesting, on Wednesday, we'll likely during the presser hear from Jerome Powell as to what their take on the current rate of inflation, or the drop, is. And if the PCE, which is their favorite inflation gauge, it's the one their models are built upon. If that confirms whatever Powell says tomorrow, that's going to absolutely help the hold, right? If Powell says inflation's looking like it's in check, we have a flat to weak PCE, great. That confirms what was said on Wednesday. So that's another little game, if you will, connection for the week. All right, let's jump into our charts. And first up is Praveen, who asks, trading view question. Awesome. Let's jump on over there. Based on the trading view discussion yesterday, what level of membership is required? Oh, if you want to use things like visible range, volume profile. So when you go into trading view, and gang, I don't have any relationship with them. I am a fan. I've been using trading view for over a decade at this point. So if, depending on how many indicators you want to use, Praveen, look at the 3 levels, because one of the main differences is how many alerts can you place based on the subscription level, and how many different indicators. So I would say take a look at their offering, and then based on that, the moment you have a premium, one of the 3 levels of paid subscription, you will get the visible range volume profile. So after that, it's really up to you. It's your choice. Okay. So I usually recommend the middle. I don't know if that one's called Pro. I usually recommend the middle level of trading view. It's the best of both worlds. It's not too expensive, but it's not so minimal that we're not paying for things we don't need, right? But the visible range volume profile alone is really helpful. Okay, so of course we've got our training room in the house. If you have any questions, let me know, and we'll jump into it. Now, a couple of the things that we want to take a look at. All right, let's jump on over to the indices, and let's take a quick peek at what's going on pre-market in the NASDAQ, the Dow, and the S&P. We do have some earnings before the bell. Again, when you look at your earnings list, think about which sector, which index it's likely to impact. This is tail wags the dog season. Okay, so definitely keep that in mind. All right, so in NASDAQ, above the previous session close, and that cash close, gang, is something I call the line in the sand. And when we have price action above the previous close, think about how the psychology is. If we're above yesterday's close, that's considered up, right? We're up on the settlement price. That's why that cash close is such a great psychological line, hence the line in the sand, as I call it. That's going to put a little bit more of a bullish emphasis on the NAS. Now, just because one index is above the line in the sand does not mean they all are. Take a look. S&P, not above the line in the sand, right? So that does not have. So we're going to take a look at some tech sectors when I see you all in the futures room and in the Sector Secrets Mastery this morning. What else is not above the line in the sand? The Dow. The common denominator between the Dow and the S&P, when those two indices, those major averages, are looking different than the NASDAQ, comes down to what's happening in XLV and XLF, right? What's happening in XLV and XLF, because that's where the S&P is a little bit more Dow-like, right? And where the S&P would be a little bit more NASDAQ-like, the connective thread is XLK, all right? So those are other things that we want to take a peek at. All right, Robert, how are you? Speaking of tech, got a question on Amazon. Thoughts on Amazon for the rest of the week? Oh, gosh, no, my friend. And here's why. The uncertainty around earnings, let's pull that up again. And by the way, gang, I use Estimize for earnings. The uncertainty around earnings would do two things. Number one, you can see there Thursday after the bell, on Amazon, right? Or hey, Bob, was this the one where we haven't adjusted? Hang on. There was a change in Amazon's earnings release. I think that was one of them. Yeah, August 3. And that was a last minute change. It's actually coming out August 3. Not the 27th. But regardless, when it comes to Amazon, I'd probably be a little hesitant because, again, we're in such a tight window to earnings. So earnings come out next Thursday. So my thinking would be focus on shorter term timeframes, either day trade Amazon or looking at a 1 hour chart. Inside 2 weeks, implied volatility goes up. But frankly, we're not going to be subjected to vol crush in a treacherous way, as long as whatever, and I would be a buyer, as long as whatever we buy, we exit before earnings, right? As long as we exit before earnings. So in that regard, the daily time frame down around 128.5 is pretty interesting as far as a trigger. You're up 31% on a 28.36 debit call spread. Yeah, Robert, what was your target on it, right? That's always what I'm going to say. For me, the upside target's going to be about 131.5. That's likely where we're going to see resistance. So at this stage, Robert, you ask yourself, what was the ultimate target? I don't know if you're looking for a percentage or if you're actually looking for a price target, but from a price target perspective, I'd say about 131.5 on that upside resistance. All right, next up is 6E. All right, what's the setup? So Joseph, I like 6E better than better than the dollar. So I see you asked a question about DXY and 6E. I'd rather be a buyer of the 6E. This is 58% of the dollar index basket. The DXY, of course, is that combination of euro, yen, pound, and also you can look at this via UUP. You can look at this via DX futures, but I'm a bigger fan of the 6E or the FXE because even the dollar basket is high concentration weighted. 58% of that basket is euro, followed by just fairy dusting of yen and pound, and then a couple other, frankly, fairly insignificantly weighted currencies. If you're looking for the main driver of why the dollar would go up, it's the 6E going down. I would like to think about long positions in the 6E, but in the aftermath of the FOMC announcement, because FOMC is going to affect US dollar bonds and gold in a usually much larger way than the historical price movement range. It's a very hot zone. And are we going to exceed 68% probability of that volatility? Very often we do. Yeah, very often we do. And so with that in mind, I would like to buy, but probably either Wednesday afternoon or Thursday morning. So the timing on that would be specific to after the FOMC decision on rates and the presser for that matter, Joseph. Thank you for the question. All right, from both our training room and the the YouTube channel, we've got a question on wheat. All right, let's go take a look at ZW. So I'm going to bring ZW up in a slightly different way. Let's look at it from a relative performance perspective. So I'm going to bring up the FinViz website, look at futures, and look at the performance. And I'll look at a monthly performance in terms of a longer term time frame entry. And where is wheat? Now I can see oats are up here, kind of thin market in terms of grains. Canola is up there again, very thin. And then let's see, we've got wheat. Where is wheat? So you see wheat right there? It's kind of in the middle on the last month. It's almost just unched. The last week, wheat clearly most recently is making a move. So realize relative performance, wheat is kind of neutral. The last week, wheat is the number one. The last day, right? I look at today, wheat is down at near the bottom. So that tells me that neutral monthly, but maybe a 60-minute time frame or a sort of a short-term swing on wheat could be really interesting. All right, so let's pull up ZW. And there is also, by the way, a wheat ETF that sometimes is rather liquid on the option side, WEAT for my non-futures traders. So wheat's had a nice surge, as you can see, but it's not in a trend quite yet. So if I'm going to do anything with wheat, it's made it above the 200 propulsion, which is done before. And likely I would look for a retest of the 200. But right now, wheat is not in a trend. It's had a great couple of days. And remember, when after a market's made a huge move, it tends to get a lot of attention. It doesn't mean that it's got a trend. So I would probably look to see if wheat can really stay above, say, 720. At that point, it might earn my trust, or if it can stay above even 700. And if that's the case, then that tells me on weakness, the buyers are willing to step in. And then that tells me there's more likely for follow through. Yes. So I'd probably not engage wheat, clearly not after a move like yesterday. Not yet, but let's see if it really has, with this recent surge within the last week or so, really gotten the bulls, the buyers, to get interested. All right. So thanks for the question on grains. All right. Do I have a price target on wheat? I do not. I do not. No, I would just go from resistance to resistance. We have a double Darvis level sitting just in front of 800. So if you're looking at where resistance could be, because a price target to the upside, look, gang, this is a Momo market, right? So if you like higher highs and that's what pulls you in, cool. I'm not saying I'm interested at all in wheat until it pulls back. However, if you're looking for an upside target, I'd step out in front of size, in front of 800, 798, 797. You can see the Darvis levels here. Automated support and resistance. This is the best automated support and resistance time-tested tool that I've ever had on my charts. And by the way, we've been making the Darvis 2.0 freely available for many, many years. So check it out. Check it out. And you can see I got a nice double Darvis right around 798, 799. All right. So next up is, do I have indicators for TradeStation? No, I do not. I do not have indicators for TradeStation. FinWest, I was the TradeStation chief currency analyst many, many moons ago. I'm a fan of the platform. I'm a fan of the brokerage. Really good people there. However, they closed the indicator store. So it's very difficult for me to get the indicators in an easy way to members and frankly non-members alike. So we used to when the indicator store was open, but I personally do not. What I do now, though, again, got plenty of love for the TradeStation. I actually hook my TradeStation platform up to TradingView. So in the trading panel, one of the things you can do is choose TradeStation, which is what I do each and every morning. So I use the data to feed TradingView for the futures, and then I'm able to execute trades if I'd like through that platform or through the online platform or through my phone even. So the way that we worked around that for our TradeStation fans is use TradingView. All the indicators are here. And then you can plug your TradeStation platform into TradingView's API. All right. So that's the way I look at TradeStation. Do we have a DPMR for wheat? Joe, I don't, and I got to tell you, I don't trade grains as much as I used to, right? I used to be a huge grain trader. Wheat can be a little illiquid, but we do have them for some of the more liquid names. I do have DPMRs for corn. We have HPMRs for beans. So some of the grains I do have, but wheat, oat, it can be a little illiquid. And so I typically don't trade them a lot. All right. Now, do we have the I know we have HPMRs for, I think, ZW. I don't know that we have the DPMRs for ZW or not. We might. Bot would know for sure. Yeah, we do. Okay, Bot's saying we do have. All right, we have DPMRs for ZW and all. Okay, so there you go. All right, gang, just like that, my time is up. My futures folks, I'll see you in a few moments. My Sector Secrets Mastery. Let's kick off our first of 3 sessions today in that room. All right, gang, and before I head out, for those of you that want to join me, it's coming up really soon. August 2, next Wednesday at 8 p.m. Come check out what we're doing in the mastery in futures, in options, in stocks, ETFs, day trading, swing trading, longer term position trading. I'm going to walk through a lot of what we're doing in this current environment. And yes, that means on August 3 begins our $7 trial. I do not do these often, so you definitely want to check it out if you've been wanting to see what's happening in the Sector Food Dojo. All right, Sector Secrets Mastery webinar, simplertrading.com/opportunity. I'll see you tomorrow.